Hello, in this presentation we will record the creation of a sales receipt. Sales receipt meaning the documentation that will be generated and prepared when we sell goods, in this case the guitar, and receive payment at the same point in time. This sales receipt documentation being compared and contrasted to an invoice, which is something that we would record when we sell the good, in this case the guitar, and expect to receive payment in the future. Something that often is used more in like a service type of business. In this type of transaction, we would expect payment basically at the same point in time of delivery. Oftentimes, when that is the case, the document used that we will record in QuickBooks will be the sales receipt. If you have been following along with us, we will be continuing on the Get Great Guitars. If you haven't been following along and just want to see the creation of a sales receipt, that is what we will do here. If you have access to the backup at this point in time and want to be working exactly where we are at here, then you can go and file and restore that backup up here, getting us to the same point in time. We will be working with entering data, and therefore we will need the prior data, the future data, and hopefully we will end up at the same point at the end of the project. If an error has been made in the past, however, note that if you restore one of the backups to that point in time, then you can work forward from there and we can all be on the same page. So what we're going to create here is going to be a create sales receipt. Now note we have the home tab open here clearly, and the home tab is open here. If you don't have the home tab open, you're going to go to company and home tab. Also, we always recommend having the open windows open here so that you can see what is open, in this case, just the home tab. We are going to be working here with the creation of the sales receipt. So we're going to have the sales receipt document that typically is going to be compared and contrasted to the invoice. And QuickBooks provides a nice visual here on the home page that will give us a clue, an idea of what that differentiation is. And you'll note that the invoice is over here, and then we're going to have a receipt payment, and then we're going to deposit it into the bank, meaning an invoice will typically happen. Often you can think of a service type business, someone doing bookkeeping or a law firm that does the work, has to bill the client, has to count how many hours they worked on, and then record how much they have earned, and then bill the client for that amount. In that type of environment, the bill is going to go out, then we're going to receive payment in the mail, then we're going to take that payment to the bank and record it. Note here we're saying that we got paid at the same point in time. So when we take a look at the create sales receipt, that's similar to what you can think of as the register. If we're just sitting there at the register and someone brought in our case, we sell guitars, so someone brought the guitar, says here's the money, and we're going to record it into our register. That's more what the sales receipt is going to record. It's bypassing the creation of the invoice, and we're getting the payment right at this point in time. So we're just going to get the payment, and then we're going to record it as a deposit after it has been received. So the difference here clearly being that we are receiving payment at the same point in time, as opposed to an invoice where we are doing the work and expect to receive payment, you can imagine, in the mail at a future point in time. So this will save us a step in that it's just going to record the payment at the same point in time. If we were to get paid at the same point in time and we accidentally created an invoice, that's okay. We would just have to do two steps. We'd have to create the invoice and then receive the payment for that invoice. To eliminate those two steps, if we get paid at the same point in time that we do the work, then we can just go directly to the create sales receipt, as we will do here, clicking on create sales receipt. So our example, we're going to have a new customer that we're going to get a sales receipt. It's going to be string music, and therefore we're going to put this information up top. I'm going to go ahead and collapse this added information. I'm going to collapse this window. We don't need the added information. And then we're going to put the customer here. So we have a customer. We can imagine string music, someone representing string music came into the store and just bought some guitar. And we're going to put the information related to that within this here. Now, we could select the drop down. We say, this person is a new customer. We don't have their information yet. We will take that down. In order to do that, we could go to new, but I like to just type it in there. I think it's easier to just type in. We're going to say, well, what's the name? and we're going to say string music. And then once we select a tab, it will prompt us to set up the customer. Now, obviously in real life, if it was a customer, especially if it was a music shop, then we would probably want to do the full setup, get as much information as possible. In this case, we're going to do the quick setup, however. That's all you need really to set up the sales receipt, and that's what we want to concentrate on. We want to concentrate on just what's happening when we set up the sales receipt. So we're going to go to the quick add, and we're going to have the template. We're going to use the template. Again, we could customize these templates a lot. We're going to use the default, which is sufficient. It looks nice to use the default, but we could put our logo on it. And if we have time later, we'll go through some of that customization options. But here we're getting to just the logistics of it. How does this thing work? So we're going to go to cash. We're going to say we got a cash payment. We're going to tab through this. The date is going to be the 16th of the 2021. This entire project being worked in 2021. To get from 12 to 16, I'm going to do that by just hitting the plus to 13, 14, 15, 16. That's a useful tool to have and use, so I recommend getting used to using the keyboard as much as possible, saving time. Tabbing through to the next item, the sales number. It's going to start at 1. It's going to count upward. Might as well keep the numbering that is generated from QuickBooks. Then we have sold to. All we have is the name. We would like to have the billing address. Again, if we were to set up the entire customer information, we would, but the name is the minimum that we need. Then we have the check number. We have cash here, so we're not going to deal with the check number. Again, the check number is informational, so it's not required. If we were to write the check, we would almost have to have a check number. But if we're receiving the check, it's a good thing to have. Any more information is a good thing to have. It's not a required field, however. Then we're going to select tab, and we're going to sell an Epiphone semi-hollow body. So that happens to be number WIL. And of course, this would hopefully be on the sticker of the guitar here. And we would put that information in. We'd say, if I select tab, that costs $400, and we can just collect the payment of that $400 at that point in time. I'm going to make these cells a bit wider. Now you might be asking, if we've looked at this in the past, it's the same as the invoice. Where did the system get this information? We want to have this information set up before, so that when we ring up the guitar, we don't have to think about, well, what's the sales price? What's the cost? How much is it? Obviously, it should be on the sticker of the guitar, so we could just type it in there if we had not already entered it into the system. But it would be much better to have it already entered into the system, so the system can ring this up, and we can then match it to the sticker that is hopefully on the guitar, and that'll give us a bit of more of a check. How did we do that? Remember, you have to go to the lists up top. You got to go to the item list, and we set up these items. So here's the items that we set up. We're looking at the Epiphone semi-hollow body, so that's going to be this item here. If we drill down on that and edit, if I go to the item tab and we edit item, we can see what we did here. Note what we see on the sales receipt is $400. That's the sales price. What we do not see, however, is the $320. And that's the beauty of QuickBooks. Will cover that. It will record not just the sales price, but the cost as we go in a perpetual system rather than a periodic inventory system. And that's going to be great for us to track the inventory in terms of our sales, the sales that we have made. So we're going to go ahead and close this out. And I'm going to go back to the open windows over here. Well, we can close this out. I'm going to close that out. And then we're going to go back to the open window. We got the 400, and then we've got the sales of 400. We have sales tax of 5% sales tax. We just made that number up. It's going to be different from state to state. Again, you would have to choose that in the lists, items, the item list, in order to get the correct sales tax for your state. So you're collecting that. But again, the beauty is QuickBooks will take that, calculate it, and put it into a liability, which all we have to do then is write a check to whoever we owe that liability to in whatever time period it's required to be made at that time. So here we have that, and we are going to received the 420. Now, if you want to print this, you can go to the print here, and if you want to mail it, obviously we can email it with these options up top. I'm going to go ahead and save and close this, and we can take a look at what it's going to do. Save and close. And if you have something in your inventory that is not a normal word, you could add the word, and I'm not even sure if that was spelled, but we're gonna keep those. And then we're gonna go back up to the reports and see what happened here. So we're gonna go to the reports, and we're gonna open up our two main reports, that being the profit and loss. But let's start with the balance sheet. Let's start with the balance sheet down here. So here is the balance sheet. We're going to change the date to 12/31/21. I'm also going to change the range so that when we drill down on it, we'll have a range. So I'm going to change and customize the range to 01/01/21, 12/31/21, and OK. Now let's think through what's going to happen here. We made a sale and we got money. So you would think, right off, you would think that we would get cash of the 420 that was deposited because we got cash. And if I double click on it, note we don't see the cash for 420 in our major checking account. And so I'm going to close that out. Reason being is that it's basically in our cash register, it's in our drawer, it's in our hand, it's not in the bank. And so QuickBooks, once again, is going to put it into this other account called undeposited funds. And so if we double click on that, we see that 420 here. So at a later point in time, we're going to have to take all these deposits we have, go to the bank with it, and deposit it. And as we do that, it'll group them all into the correct grouping, the same grouping that will then be reported on the bank statement, that making it much easier for us to match our grouping to the bank statements when we do the bank reconciliation. So that's the first thing. We need to be mindful of that and keep that in mind. Don't mix up that step, because that's an easy step to mix up. So we have that, and then the other side of it is going to be the sales. We've got the sales side of it. So I'm going to go to the reports. We're going to go to company and financial, because the sales side of it's on the income statement, or the profit and loss, that's called, which it is called by QuickBooks. So profit and loss standard. Dates are going to be 01/01/21. We are working in the future, 12/31/21. And we've got the sales. So we have our sales, merchandise sales. I'm going to double click on the merchandise sales. And there we have that. And there's our 400 there. Note what is not there, the 20. We collected 420, but the 20 we received wasn't sales. That went to who we owe. That went to a liability because it went to sales tax. We owe the state that 420. So we got 420. I mean, we owe the state 20. We got 420. We got revenue of 400. Where's that other 20? Should be on the balance sheet somewhere. It should be something that we owe to the state. Let's take a look at that. I'm going to close this back out. Back to the balance sheet. We're going to go to the balance sheet up top. We're looking through the liabilities. We're trying to see, is there something we owe to the state? And we have sales tax payable. Sales tax payable, $59.50. If we double click on that, drilling down, zooming in, we see there's that 20. And there's from the prior sales as well that we looked at, those two invoices. I don't think we considered these in prior lecture, but we have the 20 there. And that means that we owe, of the sales we made, this is a liability we owe to the state, this $59.50 whenever we have to pay that, given the rate of sales tax that we had to then collect. Note once again that QuickBooks, once this is set up, just records this journal entry, and we don't really need to know what's going on, but it's nice to be able to have an idea of which accounts are being affected when we generate these forms. So I'm going to close that out, and you would think we'd be done there, but there is another side to this, of course, because we gave up the guitar, and the guitar is an asset, and it went down, so we decreased our inventory. So we've got the inventory up top here, inventory asset. Let's see what happened to that account. If we double click on it, drilling down, zooming in, we see that it went down by 320. It went down by 320. And of course, that's the cost. That's the cost that we saw on our lists, not the sales price that we sold it for 400 and we got 420 because of sales tax, but we sold it for 320. So if we double click on that, we'll get back to our sales receipt. There's our sales receipt. We sold it for 400, collected another 20. We don't see the 320, but QuickBooks clearly recording the 320, closing this, right here, related to the cost, that being gotten through when we set the inventory item up in the lists, in the inventory lists. So I'm going to close that out. And one more item to look at, and that's going to be the cost of goods sold. Where's the other side of that transaction? The other side related to the inventory. That's going to be in the profit and loss. So in the open windows, we'll go to the profit and loss. Their cost of goods sold should contain that amount. Double clicking on the cost of goods sold, zooming in on it. There's that 320. If we double click on that, here's our same sales receipt. Closing that out, closing this out. We see then that cost of goods sold increased, sales increased by 400, cost of goods sold by I think it was 320. So the difference then is what net income is being affected by. So we're going to do this again. We're going to say there's another sales to a new customer, Sam the guitar man. Okay, so we're going to record another sales receipt. So I'm going to go back to the home tab. And once again, we're going to sales receipts, meaning we sold a guitar, we got paid at the same point in time, and so we're going to go to sales receipt, and we have a new customer. So once again, we don't see Sam in here. So Sam just came into our shop and bought a guitar, and we're like, okay, so we're going to set up Sam the guitar man, and we're going to say tab. And once again, we would probably want all the detail, but we're just going to add the quick add to see what happens here in our setup. We're going to say that we got cash and tab. The date is going to be 16th again. Invoice, or the sales number, is going to be repeated. It's going to be the same. And we're going to have the sold to here, check number. I'm just tabbing through this. And then we're going to have the item. So in this one, we had a diagnostic. So we did work on a guitar here. So now this is part of our service here rather than our inventory. And so we did it. And so once again, we could select the drop down, which has all the items, not just the inventory items, but also our services. So we have a diagnostic here, which we're going to put there. And there's our diagnostic, which was 68. We should be putting the quantity 1. If we don't have the quantity, obviously it will default to 1. And then we have another service provided here, our service and guitar full service, okay. And that's going to be 1, and that's at 140. So these are going to be service items rather than selling the guitar. Note, we may or may not have sales tax that's going to be applicable. Oftentimes, the sales tax is not applicable to service items, but only to inventory items, depending on the state. So if we go to this customer code, we're going to change it from taxable sales to non-taxable sales item. And that should remove the amount calculated for tax. Therefore, we're remaining with just the 68 and the 140, giving us the 208 in this case. When we record this, we can think through this transaction again, what is going to happen. Note that there's no inventory item here. So this is going to be more of a simple transaction because there's not a decrease in the inventory and we're not dealing with the sales tax information here. We just have a service item that was sold. No actual guitar, in our case, no inventory, and therefore we're going to have an increase or debit to some type of cash account. However, not going to our main checking account, but once again going to the undeposited funds. And then we're going to have a credit to some type of revenue or an increase in some type of revenue account. Let's see if that's the case. We're going to say save and close. And I'm going to say yes. And then we're going to go to our 2 reports, starting with the balance sheet, which is still open in our open items window. And we want to say it's not going to be in the checking account, even though we got cash. The cash went into undeposited funds. If we double click the undeposited funds, we see that amount there, the 208. Double clicking on that, we see that our sales receipt shows the 208, given these 2 services that were done. We're going to close this out. And close that out. Remember that we have to then go to the bank and then deposit that. If we just spend the 208 in cash, that's not very good practice. Typically, we want to put it in the bank being a double check of our records. So typically we want to make sure that we go to the bank and deposit any cash receipts. If not, again, we're going to have to basically adjust this undeposited accounts in some way to account for that transaction. So if there's a bunch of money in here that we do not have on hand that we're going to deposit in short order, then there's something wrong there, and we need to kind of fix that. Note once again that we will understand this problem, be able to at least locate the problem when we do bank reconciliations. The checking account, we should be able to tie down pretty well when we reconcile the bank accounts. Very important to reconcile the bank accounts. It really will help, and that'll give us an idea of whether we're doing all this stuff correctly, and so that's going to be a big component. Then the second half of this, we're going to say should be some type of revenue. That's going to be on the profit and loss or income statement. So we'll go over here to the profit and loss or income statement. Notice we put it into not the same sales item. We now have another sales item that we had set up in a prior presentation. And I think it was set up automatically by the system because we chose a merchandising and service company. But notice that if you set up a merchandising company, it may not set up another account for services, and you might have to set that up when you record a service item. In order to do that, you would go to lists, you would go to items, and you go to lists, you go to chart of accounts, and then you could set up your income account down here, one for a service item. You could a service account. It's an income statement account. You could also do it with the item list, meaning if I go to the item list over here and I was to set up an inventory item as the ones we did here, these are all service inventory items. During that setup process, we're going to have to choose the income account it goes to, and we could at that point in time set up that service inventory account at that point in time. Back to the profit and loss. There's our item. If we double click on that, here it is here. If we double click on either of these coming from the same sales receipt, there it is. We're going to practice printing this out. You could email this, you could print it. We're going to print it as a PDF using a Qt PDF printer. If you do not have a Qt PDF printer or any kind of PDF printer, then you could download it. It's a free download. It's really useful, not just in this program, but a lot of different programs, because some programs don't let you print, but they don't let you save as a PDF. But they do let you print, and therefore if you have a PDF printer, you can print it as a PDF and basically save it as a PDF. Could be quite useful, so we're going to do that. We're going to say print, and it's going to our PDF rather than another printer here. And we are going to say OK and keep the settings there, print it. And this is going to be a sales invoice. It takes a little bit of time sometimes, and sometimes when we use this Qt PDF printer, we have to minimize the window, and then it pops up. And then we're going to go and find where we want to put this. It's going to where we want it. It's on the desktop in Get Great Guitars section 7. It's going to be a PDF. I'm going to rename it, and we're going to call it Sam the Guitar Man. It's going to be I'm going to put the sales receipt, and I'm going to put the amount or the date of 01.16.21 and save that. And that's going to be it for the creation and printing of sales receipts.